Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
It's always great to have you on, and so we have a great time because you're on every week. But this is a special week, like every couple are. Today is Fed Day.
Yes.
The Fed has announced what?
That they are keeping rates on hold. Rates are set in the band of 525 to 550
So is
now.
Is it fair to say they announced nothing, but they said things? But they said things.
They released their statement
Yeah.
as per usual. They kind of gave their rationale as to their decision and kind of gave an overview of what they're concerned about, what they're watching. High level, they are seeing how financial conditions react to the tightening that we've had, particularly in the back end of the U.S. interest rate curve. They're looking into how that's going to impact things like credit conditions and how that's going to impact like households. And so largely they're saying we're going to wait and see as to how things develop. And so you're seeing pretty muted price reaction to the statement. However, we are still waiting on the press conference that's going to happen in the next 15 minutes or so.
Yeah.
But and then we should get a little bit more additional context as to the rationale. However, there's very little in terms of pricing, in terms of additional rate hikes. For this year, and so a lot of participants are focused on cuts. And yeah, it's an interesting day, for the statement to come out because you did have a lot of data this morning, in addition to the specifics around refunding came out, and so it looks like there's going to be a little less coupon paper, and the data this morning, particularly ISM in particular, was really soft.
That's the manufacturing data?
That's the manufacturing data. Prices paid was soft, and so were new orders. So much so that the Atlanta GDP Now tracker went from like mid twos in like forecasting GDP to like low ones.
Oh, wow.
And so because new orders are like a big part
Big
of it,
issue.
I believe. And so there was soft data, and we had less like back end supply than the market was expecting today, all before a relatively benign FOMC statement. So you've had a pretty significant rally in U.S. yields today. We've seen the 2-year yield take out 5%. We've seen 10s, go from like 493, 494 at the highs to 480 right now. The dollar has been a little bit, more bid than I would expect, given we've had a little bit of a risk-on move in stocks and bonds are rallying. However, that may just be more Eurocentric.
Yeah.
And then the other thing to keep in mind is we had BOJ like earlier this week.
Yeah, what did they do? I saw, is it yield curve control? It looked like there was, because JPY USD was like getting above 150 or USD,
dollar USD JPY.
Yeah.
So basically they're stuck in between a rock and a hard place. That's a function of having, easy monetary policy for better part of half a century, and you just can't get out of that instantaneously. And so what they did this week was say that the 1% band was really like in terms of the 10-year was really more of a reference area, even though their official target for the 10-year is still technically 0%. And so they're stuck between a rock and a hard place in the sense that if they don't materially address, the bond market dynamics, their currency is going to devalue like crazy. And unless they're willing to defend it super aggressively, they either have to hike up rates and, do a little bit more enhancement of the yield curve control, or it's just more status quo and they own all the paper in the economy, all the risk assets, and their currency continues to, devalue.
Right.
But high level, it speaks to, kind of just the entire, how disingenuous, monetary policy is right now, whether it's domestic or abroad. These guys in the BOJ have, literally transform their economy in the sense that it's just built on zero interest rates, and the BOJ endlessly expanding their balance sheet. If they started jacking up rates and bond prices started selling up, their banking system would be in trouble, similar to the U.S. And then in the U.S., it's wait, they have a fiscal situation that is just totally unhinged.
You don't think Powell's going to address the fiscal situation in the
No,
comments coming
not
up?
an effective.
He hasn't.
He hasn't.
Yeah.
But like, what is he supposed to do? Like, he actually can't do anything about it.
It's literally
And if
outside his remit.
It is. But and then if he's like, well, the Fed's gonna have to monetize it at some point, then it's like, wait, like.
I mean, he could also get called an activist or get politically
Yes,
targeted
and you
if
wanna
he were to do
avoid
this
that.
type of stuff.
Yeah.
So it's
But
tricky.
it's super tricky. But high level, it's like there will be a moment of reckoning there, I think, eventually. But for me, it's just more like I hate being lied to or deceived by my central bankers telling me, oh, everything's okay, we got it all managed, right? Like that didn't work out last time with telling me inflation's transitory, right? And I think generally there's just a lot of angst in the investor community and just people in general. And like that's why an asset like Bitcoin resonates with a lot of folks. Whether it's the traditional macro types or whether it's the guy that can't afford a home because, the Fed jacked rates to zero and
Right.
everybody bought all this property and, all the wealth effects, all that jazz. It's like, there's a lot of disenfranchised folks out there. And so I think it's, I continue to remain constructive on Bitcoin.
And Bitcoin's over our shoulder, right? We're around 34.5. It's basically exactly where we were when we recorded last week.
I mean, it is for all intensive purposes at the tradable high. In real size liquidity, I mean, 34,500. It is the best performing or one of the best performing assets of the year, and it's not by coincidence. You are having real size, real institutions, like folks coming in and recognizing the value that's there. And it's highly differentiated. It's been uncorrelated to other risk assets as well. It's deeply liquid. They're derivatives. I mean, it's really having its moment. And, obviously the upcoming catalyst with the ETF.
Yeah.
The bull case, really writes itself. But to be honest, like the bull case is made every day by these stupid central bankers. Every single day.
I mean, at least they're to your point, right? And you've been more defensive of the central bankers in the past, but it seems like you're sort of you're reaching a breaking point here.
No, I've just generally just grown frustrated, over time, and because it's like wait, we got to get involved in another conflict. What does that other conflict involve?
Cost money.
Cost money.
Yeah,
money you don't have, money you just print. And like if the dollar wasn't the reserve currency of the world, like this wouldn't be happening.
Yeah.
And there's no one there's very few folks in Congress that are like, hey guys, we got to spend a lot less, and I'm willing to take the political consequences of not spending.
It is at a very difficult political...
It's a political impossibility at this point.
Right.
And so, I think there's a handful of senators that talk about it, but really in terms of, rubber meets the road actions. There's limit.
You can't.
And
You
what
can't get
president
elected
is
on a message like
exactly?
that.
What president's going to get elected being like, I'm going to raise your taxes and I'm going to cut
But
spending?
this is what I like about why could the Fed not? I mean, we talked about how they're in their own political conundrum because they only have this very clear mandate by law, by the way, right? So if they were to start speaking out about fiscal, they could be accused of meddling in politics, and that could hurt the Fed overall. And but they're
absolutely.
not elected representatives in the same
Correct.
way that Congress members and senators are. So theoretically, like they are in a position to be the the big kid in the room and offer a longer term view here, but they haven't.
I mean, let's just be honest. Like boring economists on television doesn't sell. Like people aren't gonna turn on the TV to hear about like the
How we gotta get our house
combination
in
of
order
like
and stuff.
monetary and fiscal. Like that's just not like a popular thing. What do people want? They want checks in the mail. They want Social Security
Good
to
governance,
increase.
safety.
They want their potholes fixed and stuff.
Right.
And they don't want to worry about walking down the street and getting attacked or whatever.
Right,
so there's
right.
national security, right? And so
This is a bit wonkish for them.
but it's just like you can't have everything you want, but like you can't have your cake and eat it
We've
too.
never really learned that as a nation.
No.
Certainly not in generations.
No,
right?
exactly.
There are many other nations where the general populace
Absolutely.
is very familiar with the ills that can befall you
Yeah, I
if
mean there
you
are
have bad
countries that
monetary
run
policy.
like surpluses.
Yeah. Well, and there are countries that have dealt with crippling inflation that
Correct.
actually blows up their entire economy and social order in their countries. And so those people are well aware of these types of issues.
Absolutely.
Americans really just aren't. So.
Yeah, I mean, Americans are
we're
even
not, like,
untrained
there
with
now.
respect to inflation.
We're not there
we
now,
don't
but
even
the
we didn't
fear,
even understand inflation properly till maybe even we still don't.
I know.
Like,
I know.
and so it's a very tricky
Well,
dynamic.
we're not there at the the societal or economic blow up with inflation yet, but I think what we're talking about is the very long term national debt that's going to tie this country's hands in terms of what it can do fiscally because of the interest on that debt. And you've got the central bank really not speaking about that part of the equation. And
Correct.
It's frustrating.
But because it's not just about now. It's like 5 years from now. What does the profile look? 10 years from now. What does the profile look?
We've
And
seen
it
some estimates.
It looks awful. And
Yeah.
the estimates
I think-
are bad.
was it
The
Ray Dalio
CBO
had
projections are not
They're
good.
not good. Yeah. Well, maybe
Yeah.
maybe if Bitcoin becomes more popular, people will learn more about a scarce, fixed commodity type money, and that will change some attitudes about and education about money and spending. Maybe that's asking a lot, but
I think it's asking the bare minimum because money isn't what it used to be.
yeah. Bimnet, Abibi, Galaxy Trading. Thank you so much.
Thank you.